What's up, guys? This is Crypto with James talking to you today about reserve rights. Reserve rights was one of the most spoken about projects in the back end of 2020 and early 2021. And it feels like it's sort of gone off the radar a little bit now, even though it was massive and still is massive and still is on about 140,000 people's watch lists. And it's quality. And I want to show why I like it and why I think there's serious long-term potential for it. And this could be one of those bear cycle investments that you don't want to miss. Before I get into that, I update the spreadsheet. Now, these guys are the first 26 coins I spoke about on the channel. Had you invested $100 into each of these when I released videos about them, these were the prices of recordings, current prices. This would be your profit on $100. So if you'd have put in $100 into each one, you'd be in profit right now for 10K. That's after the market's crashed. If you'd have cashed out of those cryptos during the sort of market cycle where everything was flying, you'd have been in profit for 123K. Madness, the difference, right? If you want to see the coins I'm buying right now while the market is down, come check out Copy My Cryptos, where I share every coin I buy and sell. Guys, this on the site, go read it. Everything's verifiable because it's all on the bloody YouTube channel. If it resonates with you, come join me. And you can see the coins that I think are going to be massive. Make no mistake about it. Phantom. I think I was the only one on bloody anywhere talking about Phantom during 2020 when it was half a cent. Did a Udemy course only on Phantom. Said it at 100x. Did 677x. And when I find the next one that's going to do that, I'm going to be sharing that direct with the members. So if you want to find out what that is, you've got to join up. So go to the site and see it. And hopefully I'll see you there. Right, reserve rights. At half a cent now, or close to 0.6 of a cent. And look, reserve rights right now, its all-time high was around 12 cents. 11 cents? About 11 cents. So, already nearly a 20th of that. Which in and of itself is quite mad. And reserve rights, if you're unfamiliar, look, their white paper goes through in great depth the whole principle behind the reserve stabilization protocol. And that's what reserve rights token does effectively. Reserve rights is about effectively ensuring. So if we get to 4.2, where is it? So the reserve protocol can be implemented on top of any smart contract platform. Initially, they developed on Ethereum, and it will be the reserve protocol will be substantially centralized, and over time, each protocol component will be migrated on chain and released from control by the founding team. So over the course of time, it's going to become more and more and more and more decentralized. The reserve token will initially have a target of $1, but it is designed to go off of the peg to the US dollar in the long term. Now, the reserve token is RSV, but the reserve rights token is what facilitates the stability of the reserve token. So collateral tokens are other assets that are going to be held in smart contract in order to back the value of the reserve token, RSV. And the protocol is designed to hold collateral tokens worth at least 100% of the value of all reserve tokens. So the reserve token is stabilized via secondary markets. So if demand goes down for the reserve token, prices will fall on secondary markets. So what happens then? So if the redemption price of reserve is $1, if the price of reserve on the open market is 0.98, arbitrageurs will be incentivized to buy it up and redeem it with the reserve smart contract for $1 worth of collateral tokens. They'll continue buying on the open market until there is no more money to be made, which is when the market price will peg back. Same mechanism works in reverse. If the price of reserve on the open market is 1.02, arbitrageurs will be incentivized to purchase newly minted reserve tokens for $1 worth and immediately sell them on the open market, reducing the peg back. But in particular, what is interesting is, look, they've thought and they've spoken about preventing speculative attacks and bank runs, and we've seen that happen. I mean, remember US what's it called? TUSD on Terra. That's what we saw. So it's theoretically possible for the reserve to remain less than 1-to-1 collateralized if the collateral tokens depreciate and no market participants wish to purchase reserve rights tokens for more than the minimum auction price set by the protocol. In this case, the protocol widens the price band it defends for the reserve token. For example, instead of a very tight band around $1, the protocol would adjust the band to range from 95 cents to $1.05 if the collateral token had depreciated 5% and there were no demand for rights. This means that reserve tokens would temporarily be redeemable for 95 cents and will cost $1.05 to purchase. This band expanding approach eliminates the possibility of a bank run, since even if everyone wants to redeem, the last redeemer will receive the same rate as the first, which is quite a nice counter-intuitive proposal in terms of, stopping a bank run. And the whole point as well is they're going to move off of the USD peg. It's designed so that once the portfolio of tokenized assets held in smart contracts is stable enough, the reserve token can transition into representing a fractional ownership of the collateral tokens. This option is in place so that if the US dollar starts to depreciate, the reserve can maintain a more stable value. And we probably will, even if right now the US dollar is strengthening, but over the course of time, it will probably depreciate once again. And, we'll see that fluctuations over time. Now, reserve rights actually does a couple of things, because its two main purposes are ensuring reserve stablecoins through staking and governing them through proposing and voting on changes to their configuration. So it exists as a backstop to make R token holders whole in the unlikely event of a collateral token default. In order for RSR holders to provide this insurance, they can decide to stake on any one R token or divide their RSR tokens by staking on multiple R tokens. RSR holders can also decide not to stake their RSR at all. In return for providing the insurance, RSR stakers can expect to receive a portion of the revenue the R token that they decided to insure makes. As a general rule, RSR stakers can expect higher returns the bigger the market cap of the R token that they insure. Or, so as it rises, the better. In contrast with the staking you see in a lot of projects, these days RSR staking is built to last. In their model, late participants do not pay for early participants, nor is a trust in staking or of other parties required. I like this as a project. I really, really do. And when you actually look at who their backers are as well, Coinbase, Digital Currency Group. Remember, Google have been investing in Digital Currency Group. GSR, Crypto Lotus, Refactor, Distributed Global, Pre-Angel, Block Tower, NGC, Rocket Fuel, Velorum, Arrington, Divergence, Fembushi, Sam Altman, Peter Thiel, or Thiel, depends how you want to say it, Jack Selby. Some of the biggest guys in terms of like tech investment or tech entrepreneurship ever. And the list goes on. The list goes on and on and on and on. This is a really strong and very, very well backed project. And right now, probably undervalued quite dramatically. When you realize that, look, over the course of time, it was at 10 cents, now it's at 0.6 of a cent. It's a 16x from where it is right now. It's nearly 17x from where it is right now, back to its previous high. And look, when we actually take a look at reserve as well, what I like is, look, open roles. They're hiring. They're consistently hiring. This is a good sign. Look how many crypto projects have laid off their staff. We've seen it left, right, and center, particularly with centralized exchanges, of course. But Reserve are hiring like mad. Reserve are hiring like mad. They've got, they're looking for back-end software engineers, community managers, compliance analysts, CX analysts, engineering managers, Ethereum and Web3 software engineers, finance directors. They are happy hiring because they have a long-term vision. And it's not just the fact that they've got the app already up and running, they've got the protocol already up and running. they're looking to be fundamentally integrated within institutions. Reserve institutional, large transactions with lightning speed, tight spread, and privacy. Hundreds of millions of dollars have been traded on Reserve's platform by institutions and individuals. Institutions are going to like Reserve because it's rapid. And look, the minimum, $5,000. Because it's enterprise. But it's institutional. But this is where money is going to flow. And right now, hugely undervalued. The question is can it reach its high again? Now, currently circulating supply is 42 billion. If it hits 11 cents, that's what, 4.4 billion? Yeah, it can hit that. Now, how many are going to be out by the time, the next bull cycle rocks up? Certainly not 100 billion. I mean, if we actually look, we're not going to see funds from this wallet are released following a 1 month delay, block, Yeah, so, yeah. Release schedule. There you go. So 42.3 billion right now. So investors, 72%. So breakdown. Yeah, so by the end, so the slow wallet's going to have 49.44% in. 49.44% in. So that's going to be in the slow wallet. So what ends up happening is that's a locked wallet controlled by the Reserve project. It's used to fund the R token adoption initiatives like listings, partnerships, marketing. So it's under the discretionary control of the Reserve team. However, it's hard-coded. It has a hard-coded 4-week delay after initiating each withdrawal transaction on the blockchain. Upon initiating withdrawal transaction, the team announces the purpose of the withdrawal, either through a public on-chain message or on social media. If RSR holders do not agree with the purpose of the withdrawal, they are able to sell their RSR in the 4-week period before the project is able to sell what they have withdrawn. So it's complete open transaction policy as well. I like that. Anything when you're seeing a company acting in an open and transparent fashion instills confidence. That's good. If you knew Celsius were fucking around with your money in the way that they were, you would have left. Everyone would have left. This is good. They announce it every 4 weeks, and they announce anything they're going to do, and then you've got 4 weeks to make a decision on what you want to do. It's quality. Quality. I think this is an outstanding project. Down the line, this could be an absolute. This could be a beast. This could break its previous all-time high for sure. The question is how low does it go in this bear cycle? Because you could make the argument it could arguably drop to about, 0.2%. It could drop another 60% from where it is, and that would be hell of an entry point. Let me know what you guys think in the comments down below. Like the video, subscribe to the channel, and hit that bell notification so you know when new content's coming out. And yeah, guys, if you want to see the coins I'm buying up in the bear cycle, the ones I think are going to have that good solid run, that 20x's, 40, 50, 100, like I said with Phantom, like I said with Zilliqa, VeChain, come check out the website, copymycrypto.com. Links in the description. Go read the site. If it resonates with you, come join. And you know what? You can check everything out as well, because everything that's said on there is verifiable on the bloody channel. And if you like it, like I said, I'll see you there. And hope I do. Anyway, take it easy, folks. Bye-bye.